Hi everyone, this is Matt Crisafulli with ACAP Advisors and Accountants, and this is the ACAP Recap, where we go beyond the blog and explain in a little bit more detail some common questions we receive from our clients. Today, I will be discussing the Trump Payroll Tax Deferral Program. But before I get into that, please like and subscribe to our YouTube channel for weekly video updates. So what is the Trump Payroll Tax Deferral Program? Well, in the beginning of August, President Trump signed an executive memorandum giving employers the option to defer paying payroll taxes on certain employee wages. These wages needed to be paid between September 1st, 2020 and through the end of the year, which is December 31st, 2020. And only certain employees are eligible to participate in this program. So the memorandum stated that employees making $4,000 or less per biweekly pay period are eligible to participate in this program. And if you're paid on a different pay schedule, that's okay too. It's the equivalent amount that you would qualify for depending on your specific pay period. So if you're paid weekly, it's $2,000 a week. This executive memorandum posed a lot of questions to employers, people trying to figure out how to actually implement this, such as the payroll tax companies like ADP and Paychex. So the memorandum created a lot of confusion, but at the end of August, the IRS issued some updated guidance to help employers really plan and utilize this deferral that was put into place. So we've gotten a lot of questions about that. So we're putting it together in this video, and in here are some of the questions that clients are asking and some things they want some clarifications on. So the first question is, can you opt out of the program? And the answer is yes. This is an optional program. You're not required to allow employees to participate or participate yourself. It's completely optional. The only prerequisite is what I mentioned previously, that the pay period needs to be between September 1st and December 31st, and only employees making below $4,000 every 2 weeks are eligible to participate if employers opt in. The next question is, how much payroll tax can be deferred? So the IRS clarified that this is a deferral on only the Social Security portion of the payroll tax. So what does that mean? Payroll tax is comprised of 6.2% Social Security tax and 1.45% Medicare tax. So together, that 7.65 is called payroll tax. And this President Trump's payroll tax deferral only qualifies for the 6.2% Social Security tax is what qualifies for this deferral program. The other question we get is if employers are also eligible to defer paying their portion of the payroll tax. And unfortunately, no, employers are not eligible to defer their payment as well. So in other words, this is a benefit for employees trying to put money back in employees' pockets. It's the 6.2%, and employers do not get that same deferral. They have to pay them as required during normal circumstances. The next question we get is if these taxes need to be repaid, and yes, they do. This is not a payroll tax cut. So this is not something that it's not money back in your pocket. It's money back in your pocket for a short period of time. And the IRS issued guidance stating that employees need to repay whatever Social Security tax they didn't pay between September 1st, 2020 and December 31st, 2020 needs to be repaid between January 1st, 2021 and April 30th, 2021. And any payroll tax that hasn't been repaid after May 1st, 2021 is subject to penalties and interest. So that's sort of the catch. You can defer paying it for the last part of 2020, but you're going to have to pay it in 2021, shortly after the deferral period. So here's a couple other considerations to think about. One is that you're going to have to pay it back, right? So on top of payroll tax that you're going to be required to pay between January 1st, 2021 and April 30th, 2021 on those wages, you're also going to have to make up the taxes that were owed between September 1st and December 31st. So if money's tight, that extra 6.2% that's being deducted from your current paychecks could add up pretty fast and make it a costly first quarter of 2021. The next consideration, more from the employer side, is that the burden to collect this tax falls on the employer. And what that means is, regardless of whether or not your employee is with you at the start of 2021, whether they were terminated or laid off or they quit, you, the employer, are responsible for getting that payroll tax and remitting it to the federal government. And really, it's sort of unknown how that's going to be accomplished if your employee no longer works for you. So that's another consideration to keep in mind. I think the bottom line is each individual business and employee circumstances are different, and those are just some thoughts to take into consideration when determining whether or not you want to participate in this payroll tax deferral program. I hope this was helpful. This has been the ACAP Recap, where we go beyond the blog and explain a little bit about some common questions that we're getting from our clients. This one was about the Trump payroll tax deferral. And if you found this video helpful, please share it with your colleagues and leave us a comment. Thank you.